political system that we always put a Secretary of the Treasury and other high government officials into a position in which, when they make public statements, they are almost driven. Well, what's the word I want to use? I want to use a polite word, equivocate. Secretary Blumenthal knows as well as you and I do that inflation does not come from trade unions. That doesn't mean that trade unions aren't grasping. Of course they are. But they don't produce inflation for one simple reason. They do not own a printing press on which you can turn out green pieces of paper. The only such printing press is in Washington. I say printing press, of course, in the modern age, we do it in a more sophisticated way. We use bookkeepers and accountants and computers. But it comes down to the same thing. Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong.
Covered in your June report, I've been engaged in discussions on cryptocurrency policy and have long warned that a run on stablecoin has the potential to stabilize financial markets. My concerns were realized in part last month when the so-called stablecoin terror collapsed. Your report highlighted the danger of that event and called for congressional action to protect consumers and financial markets. My draft legislation, the Stablecoin Innovation and Protection Act, would establish a definition and requirements for qualified stablecoin and define as cryptocurrencies redeemable one-to-one for U.S. dollars. This legislation would reduce financial instability in the markets and protect consumers and support innovation in fintech. It would create also a pathway for banks and non-banks to acquire qualified status of stablecoins they issue. With federal oversight, do you believe non-bank entities can be reliable issuers of qualified stablecoins if they can prove they are fully backed by cash or cash equivalents?
So, as you know, we've recommended that Congress look at this, and there are many approaches, including yours. The President's Working Group did recommend that stablecoins be issued by insured depository institutions. I think it's great that Congress is looking at different approaches and evaluating those questions. What you really want, though, is you want to be sure that those entities are appropriately regulated, and in our view, in some sense, at the federal level. So, but I think that's going to be a question for Congress. You know what the PWG came up with, but I think there are different approaches.
Do you have any views on who the primary regulator should be at all? You think that's all up to Congress? Like, would the OCC would you have a problem with the OCC being a primary regulator?
For national bank charters, yes, but I mean, the thing is, stable coins are used now principally in the capital markets, as you know, around the platforms, the digital finance platforms, and that's more in the bailiwick of the SEC. If there were going to be payment stable coins, we should be involved, and if it's going to be about banks getting involved, it'll be the banking regulator. So I think it's going to be, we're blessed by a plethora of regulatory agencies in the financial sector, so that'll need to be sorted out.
Do you think that's something, given the challenges we've had in the last months, that's something we have to move quickly on? Are you concerned with how long it's taking Congress to actually act there?
I think it's very important. It's no different than any other big technological innovation. Airplanes, for example, there comes a point at which a new regulatory framework is needed to protect the public and create preserve innovation and competition, foster, support all that, but that time is coming for digital finance, and I think I'm encouraged that there are now a bunch of bills and proposals, and that Congress is working on this. I think it's important that it get done quickly, because as we've seen, these companies can grow really quickly, and we've also seen that they can have reverses as well.
And you think overall the ideal role of the Fed in overseeing stable coins is what? What ultimately you think long term? What's the role of the Fed?
Well, so the one question is around CBDCs, right? Is if do we want a private stablecoin to wind up being the digital dollar? And I think the answer is no. If we're going to have a digital dollar, it should be done by us. We don't know that we need a digital dollar as such yet, but I think that it should be government guaranteed money, not private money that is really created for the benefit of the private issuer. So that's one thing. I think also we're very important in payments. So anything to do with payments that the public is involved in, we should be involved in that too.
Employment. How is unemployment calculated?
So you have to be actively looking for work within the last month and not have a job to be unemployed. If you're not looking, then you're out of the labor force, and that's so you're not participating in the labor force. So those are the factors. So down in the housing market, you're seeing fewer buyers. You're seeing housing starts move back. That the housing market's going to be cooling off. It's been very, very hot. Price increases have been extraordinarily high. And it's one of the channels through which monetary policy works. It's interest-sensitive spending in particular. So I do think it doesn't directly affect construction costs, to your question, but many home builders do work on borrowed money, and it'll certainly affect their profits and their activities.
Barking on raising interest rates because that's the only tool you think you have left. This is not just a dog chasing its tail anymore, sir. This is a dog that's starting to devour its tail and its back end because of the debt that we are carrying. I want to thank you. You acknowledge we're in a bad spot. We're knowingly walking toward an even worse inflation, a recession, and God forbid, food shortages. Yet we're relying on old monetary policy tools to keep us from falling off a cliff. Sure, we can raise interest rates over and over, but the only way to curb in a disaster this bad is to raise interest rates to a catastrophic level, or as like Larry Summers suggested, we allow unemployment to go to historical highs. It's not feasible. We need to put ourselves on a strict spending diet, and we have to have strict oversight on the funds that Congress has already allocated to make sure not even one single dollar is going to waste. And we need to put control back in the hands of small businesses on Main Street.
There's inflation in Europe, just like there's inflation here. Although, as I talked to Christine Lagarde and others, they say the cause of the inflation may be different. So if the causes are different, they said that maybe demand here, but not a case of demand there, is to resolve inflation in Europe. For example, I was in Moldova, 30% inflation rate, gas $15 a gallon. Turkey, 80% inflation rate, gas, $13 a gallon. And I could name places in Europe, from Europe to the United States. Is it that we had, whether it was the supply chains, the China shutdown, complete shutdown, the zero COVID policy, Russia's war in Ukraine, COVID period? Isn't just a massive storm of everything is what contributes to inflation and causes it all over the world?
Pretty much. Yeah, that's pretty good.
It's a little bit of everything, right? So if I'm talking to my constituents, trying to explain to them what inflation is and what causes it, I would not single out any one thing. I would probably have to talk about the conglomerate of things, because if you take away 2 or 3 of those, we might not be in the situation here. All of it unprecedented. All of it really out of the control of anyone, out of control of Democrats, out of control of Republicans, out of control of the president, out of control of other governments. Is that not correct?
Some of it is out of our control. For example, the president.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And guys, we had Jerome Powell in the house again. And we had the puppets definitely show off. No one blames Congress or the Fed for all this inflation. It's global because the U.S. dollar is global. And no one wants to say it. It came from the money printer. If this video doesn't show you that America is in trouble, I don't know what will. These politicians actually put on some acting. They deserve some Oscars. And guys, when it comes to unemployment, we know these numbers are false. If you're not getting unemployment benefits and you're not working, you fall out the system. And there's millions and millions of people have just fell out the system because they went a whole year and a half without working. They knew what this free money was going to do. Condition the people that already didn't want to work that they don't have to work. That's the reason why we see crime just keep elevating. And over this next year, guys, we're going to see a wave of layoffs. Foreclosures are going to go through the roof. You thought 2008 housing market crash was bad? You wait until we get to 2023 and 2024. Remember, you will own nothing, but you will be happy. America to Babylon is definitely falling. China, the dragon, is definitely rising. And the only solution the Fed has is the robots, algorithms, and drones. And cryptocurrency. And remember, crypto is hidden meaning, hidden message. So remember, these cryptos are not for you. And remember, the crypto teacher told you, because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
Administration and persons on my side of the aisle sought to do something about that to help those who were unemployed. The inflation that my colleagues speak of has to do with unemployment, the help that we gave people who were unemployed at the time. Persons who are unemployed, Mr. Chair, they need help. They can't feed their families. Small businesses were screaming for help. We helped small businesses to get through a turbulent time. This was a pandemic. The vaccines had to be distributed and developed. That's a part of that inflation that they're speaking of. People needed rental assistance. People were literally going to be evicted by the millions, but for the assistance from the Biden administration and Congress. We wanted people to go to work. We provided some child care. If you want people to go to work, schools are closed. You got to help people through these turbulent times. They never talk about what the inflationary costs that they speak of really did, how it benefited American people who were suffering. They overlooked that. They weren't going to help, and now, since they didn't help, they're going to say everything that they can to demean the help that was given.
Today, because it's being said in other rooms in this building, what the American people are seeing today is something that my Republican Party friends have given over to recently all too often, and that is rank dishonesty in the service of acquiring and retaining power. A party without any resilient or discernible principle has stumbled upon inflation. There's inflation all over the world. Germany, Japan, Africa, South America, the United Kingdom. There's inflation all over the world. But the Republican Party has decided that inflation is Joe Biden's fault, or the American Recovery Plan's fault. I've read the monetary policy report from start to finish. It gives the Russian invasion of Ukraine, supply chain bottlenecks, high fuel costs, high wage growth. It does not mention Joe Biden or the American Recovery Plan. By the way, the American Recovery Plan is a particularly rank piece of dishonesty. Set aside the fact that it cut childhood poverty in half. As Mr. Green pointed out, if that isn't something to celebrate and to perhaps have the slightest bit of humility as you attack it, I don't know what I can do for you.
Most since being that dirty word that we call politician several years back. What is the greatest rabbit hole that you've gone down since you've been in government?
The greatest rabbit hole.
Like, what's something that you've learned since being in government that you kind of wish, I suppose, when you were...
I didn't know that. Oh, well, one, that it's all fake. You know, that was really a very sad moment for me when I served on the House International Relations Committee, and the particular subcommittee, I think it was Western Hemisphere Subcommittee, was having a hearing, and the chairman of the subcommittee was there. I was on the subcommittee, so I was there. And then the committee or the subcommittee were interviewing, had a panel of witnesses that were being questioned by the subcommittee members. And it looked like it was a normal event. Then, all of a sudden, the chairman of the subcommittee, we sit down, we go through the hearing. The chairman of the subcommittee is fussing at the witness, and the witness is antagonistic toward the chairman of the subcommittee. So there's some friction, there's electricity, there's something happening in the air. After the hearing is over, the chairman backslaps the witness and they walk out together. It was just theater. Didn't mean anything. So that was like the saddest thing for me to realize that it was all just theater. Didn't really mean anything. And that's probably the harshest lesson, but that's the realest lesson.
You also elaborate on what you meant when you said perhaps corporations are raising prices, quote, because they can.
Sure. So matters of concentration in the economy represent a series of interesting questions that are largely not settled. For one thing, it is clear that our economy has become more concentrated, largely due to lower levels of formation of smaller businesses. That has happened. It is not at all clear that there's a connection between a more concentrated economy and, for example, inflation. And of course, matters of corporate concentration are outside the jurisdiction of the Fed. Those are for the competition authorities and really not for us to discuss. In terms of why prices are going up, I think a lot of it has been. A lot of the places where prices have gone up quite a bit have been situations where supply is constrained and demand is very strong. And so take cars, for example. Demand for cars went up a great deal during the pandemic. People wanted to ride in cars rather than public transportation, and they wanted to move to the suburbs and things like that. Rates were low. The economy was stronger than people expected. But the companies couldn't really make more cars because they couldn't raise their output because of the lack of semiconductors. So when demand hits fixed supply, what happens is prices go up and margins went up. And so I think as the economy returns to normal, we would expect those profit margins to return to more normal levels.
I gave of Tyson, who said their prices were rising because of labor and freight costs, and yet they managed to net an additional $500 million quarterly profits.
I apologize. I'm having a hard time hearing your words. I'm sorry.
Okay. The example that I gave of Tyson Foods and the fact that they said that their prices were rising due to labor and freight costs, yet they managed to net an additional $500 million in quarterly profits. How do you explain that?
I'm not familiar with their profit and loss statement, but I will say, and again, there may be particular industries where there are competition issues.
Of mortgage-backed securities, what are expectations for how that affects housing?
So I think what will affect housing is the rate. The housing industry and market are slowing down from a very, very hot pace, and that's partially because of higher mortgage rates. The effects of shrinking the balance sheet will be marginal compared to the effects that we're seeing and expect to continue to see from rates rising mortgage rates.
But what are your expectations and any further announcements? Can we expect further announcements on the assets you hold and the securities you hold? Or are there going to be balance sheet announcements in the coming weeks?
No. I would say this: we have a plan. We've articulated it. The markets are forward-looking. They see it, and the markets are in a good place. I think understanding what we're going to do, and that's we're going to be allowing these securities to mature and run off our balance sheet at a pace that we've said, and it'll be 90 or 95 billion, I guess, by September. Now it's about half of that. So that's what we've done, and we expect. The idea is that that'll just be on an ongoing basis in the background. We think the markets can handle that. Treasury issuance is way down, so we think there will be demand for these securities. The Treasury will then reissue them in whatever form they think is appropriate when it relates to Treasuries. So,
thank you.
part of the solution. I want to talk about regulation for a minute, particularly since the Biden administration delayed oil and gas lease sales again this week due to environmental protests. So if we pursued policies to increase American energy production by approving more leases and building more pipelines to transfer that energy and cut down on regulatory barriers to make it easier for folks to produce energy and produce anything, wouldn't that make a real impact on energy prices and inflation in general without us needing to use the Fed to slow the economy with monetary policy to deal with inflation?
So these questions of the whole set of questions around energy are really questions for elected people. We don't have a mandate there. Obviously, the more supply there is, the price of something can go down. But these are trade-offs that you really have to weigh as elected officials. Rather than
I'll narrow it just for a minute. The amount of regulation is an impediment to economic growth.
I will say this: we try hard at the Fed to weigh the costs and benefits of regulation, and we do think it's important to think about it that way, because there are benefits to regulation, but there are costs, and we don't want the costs to be any higher than they need to be, because that does weigh on economic activity. Yes.
I mean, when you talk about somebody trying to buy a home and now they're questioning it because of the rise in mortgage rates, and then I hear for years that the 25% of the cost of a new home is due to regulation at some level. So that's the point I'm trying to make, is that we need to be very cautious with our regulations, because a lot of it's constraining our growth, and the growth ultimately which solves this fiscal problem.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.